What is your main, number one concern right now?
I think it's a trade war. I mean, Hong Kong, I don't think is impacting the markets directly as much. This trade war is what the Fed has said is the reason that they cut rates. Powell says trade uncertainty. Trump wants more rate cuts. He gives them more trade uncertainty. So I'm more concerned about the trade war than Hong Kong per se right now.
Yeah, I mean, listen, again, on that wall, we could have put, Fed concerns. Has the Fed kind of screwed it up? Are they miscommunicating or mismanaging this as well?
They clearly miscommunicated.
So when you talk about the trade, I think that, is it fair to say the trade war and the Fed are kind of one and the same right now?
Oh, yeah, I think so. I mean, that's
because they've got to react. They've got to pay attention to that.
The Fed chairman himself was the one that said that that's the things that were creating the more uncertainty for them.
Yeah. And their job is to manage inflation, one of their jobs. And if the tariffs kick in on September 1st on the consumer goods, inflation is likely to rise. So they've got to react not only sort of psychologically, but to their edict
after years of
inflation.
Trying to get inflation to rise, now it's going to rise a little bit, and they're going to get all crazy and start cutting. I mean, it's probably going to happen. I don't necessarily think that we need to have a lower rate situation right now, and I think the Fed has a communication problem. But the thing that we're looking at also is this recession risk, the fear of the yield curve inversion. The research we did showed that not really until the Fed funds rate kicks up above the 30-year that you've got that clear recession risk. So everyone's sort of jumping the gun here a little bit and making headlines and talking about this 2-year, 10-year.
Well, I know, and I hate to use the term basis points at 5:07 in the morning. Obviously, we're just talking about,
a bit much.
1%, these little blips. But we are now just 7, I said it, basis points away from that inversion on 210. It's been a pretty good.
Not that that's a great situation, but it's not a recession.
It's
not a hands-down recession.
And I think that's the big debate right now, which is the bond market sort of flashing that big recession signal, or do our yields keep falling because our bonds keep getting bought because nobody around the world is getting any yield anywhere else?
I think that's more the case than the recession fears per se. I mean, the bond market, we're the place to be right now. So we've got to sort of come down to the rest of the major economies in the world, and I think that's what's happening. And the pressure from the White House is not something to scoff at. It's not necessarily verbal stuff. He's going to do things that are going to create the uncertainty he wants. I mean, it's classic election cycle behavior. We were talking about, one of the pages of the almanac is how the government manipulates the economy to stay in power. This is an incumbent president pushing to get reelected, and it drives things.
There is a school of thought out there, Jeff, and I don't know if you're in that classroom or not, which is that we could get some kind of favorable end to the trade fight, early next year, right around the time things are heating up. And I think the reason I bring it up is not politically. There's a bid sort of in the market still, because remember, we're still up, like 15 to 17% on most of the major averages this year. We need to put it in context that there's a bid sort of putting a floor into the markets because people sort of quietly expect this favorable outcome for political reasons.
In sneak preview on the 2020 almanac, I have a chart in there shows sitting presidents running for re-election versus all election years versus open fields, no sitting president. Sitting years with somebody running 10%. All election years, 5%, and minus 1.6 for open field elections. So there is something to the power of incumbency there.
So sitting presidents going into re-election
running for re-election
tend to historically, and this is what you guys do better than anybody else, I hate to use, goose the market? Historically,
prime the pump?
They do better?
Yeah.
Because a lot of maybe promises, we're seeing the Democrats promise a lot. Trump may come out and start promising a lot.
I mean, you've got a psychological situation where, there's somebody getting reelected, and there's a lot of drive to make that happen. And that's what does it. I mean, it is August, too. I mean, we're looking at a seasonally weak period. Everyone's talking about it now. Well, we came in prepared for this.
Yeah.
We've been market neutral since, mid-July mostly. There's a couple of short days in there, and it's set up pretty well. The whole year's been tracking seasonally quite closely. I think it continues.
Okay.
Which means good things for the end of the year.
Good thing. You still remain optimistic on equities toward the end of the year.
I think we've got a choppy period. I mean, look at the charts of the seasonal patterns. This is right, it's almost to a T. So to me, that tells me this is going to keep tracking the seasonal patterns.
Okay,